Stocks are lower across the board today as we enter the last trading week of a difficult month. My next guest warns it's likely to get worse before it gets better. Here to share his current investment strategy, Rich Weiss of American Century Investments. Good to see you again. Welcome back.
Pleasure, Scott. Thank you.
Yeah, it's rough out there, to say the least. Why is it going to get worse before it gets better?
Well, a number of reasons. Where do you want me to start? I guess the triple threat of the three S's, right? The shutdowns, the strikes, the school loans. That's probably the least of it right now. Certainly weighing on the markets, and at least one of them are already going to be weighing on the real economy. Add to that tightening credit standards, high and rising interest rates, and last but certainly not least, nagging inflation, right? I mean, it's there's a medical analogy I use where the Chairman Powell is the doctor. He's administering antibiotics in the form of tight monetary policy to try to get rid of this fever that the ill economy has. And the fever's still there. It's been coming down, but he's made it clear progress towards 98.6 isn't good enough. You got to get there. You got to get to the 2% inflation rate. We have a ways to go there. That's going to weigh on the economy. So they're steering between the proverbial rock and a hard place, right?
But Homer. But how do you, everything you say obviously makes sense. I mean, they're all plausible and credible views. But how do you make sense then of why the market is here in the first place if all of those things existed for the most part over the last 8 months?
I think it boils down to fear and greed. Market swings wildly in both directions, sometimes overshooting, again, in both directions. And I think it boils down to valuation. Look, relative valuation, bond yields rising makes stocks less attractive. I think that's the new item which is pushing stocks down today. Higher long-term bond yields, relative attractiveness or unattractiveness of stocks. I think it's as simple as that as to why the stock market has been moving down these last few days.
It's so funny. I have a conversation at the very beginning of the show with somebody who says 4,600 on the S&P by the end of this year makes perfect sense. Market is fairly valued. Earnings are going to live up to the hype as well. And then some 41 minutes later, I've got somebody arguing the exact opposite. Do you not think that earnings are going to live up to where expectations have come to?
I don't think so. Earnings may come in strong this third quarter, but I think, I don't think there's any debate about the slowdown, right? It's not a matter of if we're getting a slowdown, it's to what degree. Are we hitting a soft or hard landing? I think earnings will be disappointing late this year and into 2024. But hey, that's what makes a market, right? And at least for the past, let's say, year and a half, 2 years, okay, being positioned prudently, cautiously, safely has been the way to go. We're not trying to call the market every twist and turn day to day. But over the last year and 3 quarters, it's been better to be hunkered down in cash.